be germane to the work you're doing, but you are one of the great thinkers. Artificial intelligence.
Yeah.
Pros and cons. We've heard.
What if I told you that the best investor on earth isn't Warren Buffett, isn't a Wall Street hedge fund manager? It's artificial intelligence across global markets. Machine-driven portfolios are quietly outperforming human traders, achieving consistency, precision, and returns that used to seem impossible. These systems don't sleep, panic, or chase hype. They analyze billions of data points, react in milliseconds, and learn from every trade they make. The result: portfolios that beat 99% of human traders across every asset class. In this video, we'll break down how artificial intelligence is building the ultimate investment machine and how it's rewriting the rules of wealth creation forever. The death of emotion in trading. The biggest weakness in investing has always been human emotion, fear during crashes and greed during rallies. Artificial intelligence eliminates both. It doesn't get attached to a stock or a strategy. It acts purely on logic and probability. By analyzing historical data, social sentiment, and real-time signals, artificial intelligence makes decisions without bias. When the market collapses, it doesn't panic, it recalculates. When prices spike irrationally, it doesn't chase, it evaluates risk. This emotionless precision gives artificial intelligence portfolios a massive edge. While humans second-guess themselves, machines stay disciplined, and in the long game, discipline always wins. Learning from every market move, human traders rely on intuition, but artificial intelligence learns from experience, millions of times faster. Using machine learning, it studies endless patterns in market data, how assets move before big events, how liquidity changes, and how traders react under pressure. Each trade becomes feedback. Every success refines its strategy, every failure improves it. The longer an artificial intelligence system trades, the smarter it becomes. It's not static, it evolves. While humans plateau, machines compound knowledge. This is why today's artificial intelligence portfolios outperform even seasoned professionals, because they don't just play the market, they study it in real time. Data, the fuel of machine intelligence. Artificial intelligence thrives on data, and in finance, there's an infinite supply. It analyzes charts, news headlines, earnings reports, interest rates, and even satellite imagery, everything that moves markets. These data streams feed models that identify patterns invisible to human analysts. For example, artificial intelligence can detect when factory lights are turning on earlier, a sign of production growth, or when online traffic spikes to certain retailers. It doesn't guess, it quantifies. In today's financial world, the trader with the best data wins, and no one collects, cleans, and interprets data faster than artificial intelligence. Predictive power. Seeing before it happens, artificial intelligence doesn't predict the future. It calculates probabilities with breathtaking accuracy. By scanning years of market behavior, it anticipates how assets might respond to new conditions. This predictive ability gives it seconds, sometimes hours, of advantage over humans, and in markets, a few seconds can mean millions. While most traders react to headlines, artificial intelligence reacts to the patterns behind them. It sees momentum shifts and volatility spikes before they surface publicly. This foresight allows artificial intelligence portfolios to enter early and exit before crashes, a game of timing that no human mind can replicate. Diversification without distraction. Managing multiple asset classes takes enormous time and attention. Artificial intelligence doesn't mind complexity. It can handle stocks, bonds, commodities, crypto, and derivatives all at once, balancing risk and reward across thousands of positions. It continuously rebalances portfolios based on correlations, liquidity, and sentiment changes. This hyper-diversified strategy eliminates human error caused by overconfidence or tunnel vision. The result, a portfolio that reacts instantly to shifting markets, reallocating capital with mathematical precision. Artificial intelligence doesn't get overwhelmed, it thrives in chaos. And that ability to process the entire global market simultaneously is exactly why it outperforms almost every human investor alive. Risk management reimagined. Most human traders manage risk emotionally, setting arbitrary stop losses or ignoring danger signs out of hope. Artificial intelligence has no such weakness. It quantifies risk dynamically, monitoring volatility, liquidity, and exposure in real time. When conditions change, it instantly adjusts. It doesn't need permission, it acts. This allows artificial intelligence portfolios to protect capital during crashes and expand during growth cycles. Instead of reacting to loss, it prevents it. This predictive risk control transforms volatility from a threat into an opportunity. In short, artificial intelligence doesn't just manage risk, it masters it, giving investors unprecedented stability in unpredictable markets. Beating Wall Street at its own game, Wall Street firms have spent decades building models to predict markets. But artificial intelligence plays a different game. It rewrites them. Instead of relying on static rules, it constantly evolves based on performance feedback. This adaptability gives artificial intelligence investors a decisive edge. While humans argue over fundamentals or sentiment, machines act on evidence. The best performing hedge funds today, like Renaissance Technologies and 2 Sigma, use artificial intelligence to make millions of micro decisions daily. Their algorithms detect correlations humans don't even know exist. Wall Street used to be run by intuition. Now it's run by intelligence that never sleeps. Artificial intelligence for crypto. The 24/7 revolution, crypto never sleeps, and artificial intelligence loves that. Traditional traders can't operate in a market that runs 24/7, but algorithms thrive there. They track every token, trend, and transaction across global exchanges in real time. Artificial intelligence doesn't just trade crypto, it understands it, analyzing sentiment, whale movements, and liquidity shifts every second. It reacts instantly to volatility and exploits inefficiencies humans can't see. As artificial intelligence continues learning, it's beginning to treat the entire crypto space as a living ecosystem, one it can adapt to faster than any manual trader ever could. The result: profits built on prediction, not emotion. Institutional adoption, the quiet revolution. The world's largest financial institutions are already using artificial intelligence portfolios to manage billions. BlackRock uses it to optimize ETFs. JP Morgan uses predictive modeling to detect trading anomalies. Goldman Sachs deploys machine learning in its risk management. Hedge funds run fully automated systems that outperform human managers with less overhead and fewer mistakes. The quiet truth is that artificial intelligence already runs Wall Street. The public just hasn't realized it yet. The next wave isn't replacement, it's dominance. As artificial intelligence takes over portfolio construction, the financial elite are shifting from intuition-driven decisions to pure computational intelligence. The rise of autonomous wealth. Imagine a portfolio that invests, manages risk, and compounds profits entirely on its own. That's autonomous wealth. Artificial intelligence systems now handle end-to-end financial management, from rebalancing assets to reinvesting dividends automatically. They don't just follow trends, they create them by reallocating liquidity intelligently. For investors, this means passive income with active intelligence, wealth that literally grows while you sleep. This is the evolution from smart investing to self-investing. By 2030, artificial intelligence managed capital could control more than half of global assets. The future of wealth management won't involve brokers or advisors. It will involve machines optimizing your money better than you ever could. The democratization of intelligence, the best part. This technology is no longer locked inside billion-dollar hedge funds. Everyday investors can now access artificial intelligence trading platforms, portfolio assistants, and analytical bots that replicate institutional strategies. What used to require an elite team of quants and massive infrastructure is now available on your laptop or phone. Artificial intelligence has democratized access to sophisticated investing tools once reserved for the ultra-wealthy. That means a student, freelancer, or small business owner can now build an intelligent portfolio that competes with Wall Street. The playing field isn't just leveling, it's being reprogrammed entirely. The future, intelligence is the new asset class. We're entering an era where intelligence itself is money. Artificial intelligence portfolios don't just grow wealth, they create it by turning data into opportunity. The investors of tomorrow won't ask, "What's the best stock?" They'll ask, "What is my machine learning right now?" Human traders will always have instinct, but artificial intelligence will always have precision, and precision wins over time. The next financial superpowers won't wear suits or hold degrees. They'll build algorithms that understand the markets better than we ever could. The smartest investment you can make today isn't in a company, it's in intelligence itself. Artificial intelligence isn't the future of investing, it is investing. The portfolios that once took decades to master are now managed by code that learns, evolves, and executes with perfect discipline. The question isn't whether artificial intelligence will outperform humans. It already does. If this gave you a new perspective on the future of wealth, make sure to like, share, and subscribe for more deep dives into how artificial intelligence is rewriting the world of money forever.